Hi, this is Alessio. Hope you're well, and welcome to another update on the financial markets. In this particular video, we're going to take a look again at the market that knows all, the market that knows everything. And I'm also going to show you this particular chart as well, and what this could be warning us about. There's some important warning signals from this chart, which we'll take a look at in just a few moments. Before I do that though, I want to first of all explain to you what I mean by the market that knows everything, because that sounds a bit strange. Why do we say that this market knows all? As I'm sure you probably know by now, the market I'm referring to is the bond market. Bonds know everything. The reason is very simple, because bonds are traded not by your average investor, not by your average person out there, but by institutions, by the big money out there. So whenever you see the big money doing something, when you see institutions are doing something which is out of the ordinary, when it looks odd and actually worrying, then that's the time to be very careful, because we often get important signals then. Now, as you probably know by now, there are two kinds of bonds. One bond market is called LQD, which is the investment grade high quality bonds. So the chart you're seeing here is LQD. This is the investment grade corporate bonds, the ETF. Now, there is another kind of bond market out there, which is known as junk bonds. So what are junk bonds? So this is actually a passage from a book, a great book by trader Linda Raschke, who, by the way, I interviewed last week. I had a fantastic conversation with Linda Raschke, who, in case you're not aware, she is one of the market wizards that was interviewed in the book, The New Market Wizards. By the way, guys, if you haven't read yet Linda's book, Trading Sardines, make sure you get it and read it. It's a fantastic book. You can learn a lot of information from it. Here's a passage from her book, Trading Sardines, and she says this. She says, junk bonds were conveniently renamed high-yield bonds to make it easier for investors to digest. It's nicer to think of a bond as giving you a high yield rather than reminding you that what you're buying is actually junk. Okay? And by the way, she continues in the rest of the book. She says, the finance industry has a funny way of renaming things to make them sound better to the public. Take the term correction, for example. What a cute word for what actually represents a 10% drop in the market. Oh, the market's just correcting itself, like it made a boo-boo. Please. So as you can see here, she has a great style of writing, and it's actually quite an easy read, this book. So Linda's absolutely right. The junk bond market were renamed high yield bonds, also called HYG, and that's the chart I'm referring to right now. This is the chart we're looking at. And by the way, this is the chart I'm going to bring your attention to because it's giving us a potential warning. Notice that in the past, whenever the junk bond market, or HYG, the high yield corporate bond market, whenever it's broken out of its trend and its coiling triangular formation, it's usually been a bad sign. For example, if you take a look over here, back in March of 2020, look what happened here. As you'll see, we had a coiling triangular pattern formation here, and notice what happened next. It broke below that trend line, and out of that triangular formation, the coiling pattern, and of course we know what happened pretty much afterwards. The market then collapsed, and HYG also then dropped significantly lower. The same thing actually happened in October 2017. Take a look over here. In October 2017, we saw a similar pattern break below the trend line out of this coiling pattern. And by the way, this breakout below this pattern and the selling that occurred actually happened. Let me show you this to you. Let's go on this chart over here. Notice that when traders, again, this is the big money out there, institutional traders, they started selling junk bonds here in October of 2017. The market, this is the S&P, the stock markets, they sold some months afterwards. By the way, notice that in January 2018 had a massive drop. And by the way, notice the continued selling. If I show you this chart again, traders and investors continued to sell the junk bond market some months before this major drop that occurred in the S&P. As you can see, this major drop that occurred in 2019 because HYG, the junk bond market, started selling off before that one did. So often we do get important clues that something bad is potentially going to happen when the junk bond market starts selling below its triangular formation, like the one you're seeing here. Notice we formed a very similar pennant triangular formation here, a tight coiling pattern, and you can see breaking below this triangular pattern. And if we go on a higher time frame chart, this is the weekly chart now. Take a look at the weekly chart on HYG. Let me bring this closer so we can see it properly. Yeah. So guys, as you can see here, we're now breaking below on the weekly time frame. We're breaking out of this triangular formation below the trend line and breaking below the weekly 21 average. Now, I should just say that I've marked here on my chart an important level that you'll see here as 82.9. 82.9 is going to be a level that I'm going to keep an eye on here, okay? And I'll explain to you why in a few minutes. But bottom line is this, guys. Bottom line is that whenever the junk bond market starts selling off like it has done recently, in the past, it's been a good warning signal that something bad or something much worse could potentially happen down the line. In other words, it's giving us a warning that potentially we might see more selling in the stock markets. Okay, now I should say the stock markets and HYG, both junk bonds and the stock markets at the moment are oversold. They had been oversold last week. So I'm expecting a bounce potentially this week. I think in the next week or so, a bounce here is probably quite likely. Some kind of a bounce is probably likely at this point. But here's the thing. If junk bonds were to close in the next few weeks, let's say we get a bounce and then we close below 82.9. If we get a close below 82.9 on HYG, on junk bonds, this is potentially a sign, very high probability sign, that we could see more volatility and potentially more selling in the financial markets, for example, in the stock markets, as an example. All right, guys. So this is one market to watch, and the reason, in case you're wondering why, is very simple. Because traders and investors buy junk bonds when they feel safer about the market, when they feel more confident about the market. So when they see signs that the market could recover, when they feel more confident about how the economy is and how about the stock market is, they start buying junk bonds, as you can see here back in March. But when they feel uncertain about the market, when they feel the market is not what it should be, when they see signs of danger or risk, then they start selling junk bonds. Okay, so the reason why we're seeing junk bonds being sold right now is because, again, traders and investors, the big money out there, is not feeling confident right now about how things are going. They're feeling uncertain. And guys, put yourself in their position. You're holding junk bonds. What you're holding is very high risk. So why would you want to hold on to something extremely high risk, which, by the way, pays you a nice interest? That's one of the reasons why they buy this stuff. It pays you a nice interest. But why would you want to hold on to something that could potentially be high risk, again, junk bonds, when the market and when things in the economy are not going the right way? So basically, guys, be very careful right now, because this market, HYG or junk bonds, if this continues to push any lower, if I see junk bonds pushing below 82.9, if I see junk bonds closing next week below 82.9, okay, so if in the next few weeks we see on the weekly chart junk bonds closing below 82.9, that opens a door for potential more sell-offs in the junk bond market and potentially also in the stock markets. So this is one market to watch that shows to us potential more volatility and more fear likely in the market.